Alright guys, and welcome back to another suburb breakdown. And in this video, I'm going to break down all things regarding Hobart. And I do want to say about this location, there are definitely interesting opportunities out there. However, you are going completely against the grain. You are going with a very counter-cyclical approach if you are looking to invest into Hobart and go against all the advice, against all the social media, against all the hype that's happening right now in regional Queensland and all the hot markets like in Melbourne, in Victoria, and New South Wales. Hobart and wider Tasmania is a very cool market, and there are definitely pros and cons to considering this area. So make sure you do watch the entire video to fully understand whether or not you should consider this location, because I always say this, if you only watch the first 30 seconds, then you're not going to know jack at all. And like always, I'm going to break down the first few suburbs that you should consider across Hobart for a variety of different price ranges. And the first suburb that is showing promise is Glenorchy in Glenorchy City Council, where the median buy price is around $570,000-$600,000, where you can achieve a 5% yield. And I'm going to show you a property that is achieving above a 5% yield in this video. And when we start to look at the price growth over the past year and the history of it, you can see that the prices have started increasing in Glenorchy. There is positive price movement. And the interesting thing about Hobart, or in wider Tasmania in general, during 2016 to all the way till about 2021, Hobart and wider Tasmania overperformed. They did so damn well that it has gone through a large stagnation period and then a significantly large correction, if I say that's the right way to say it. And it's very interesting because I think this correction has come from the back of all the price growth and all the overperformance it has had in that period, in the 2016 to 2021 period. And now we're starting to see prices starting to move again. And one thing I don't like in this suburb is that the rental prices have not grown. It's only grown about 1% over the past 12 months, which is very poor. There's a decent amount of renters out there, but the vacancy rate is still very tight. Affordability is not very good. It's sitting close to 40 years, which means it's not really affordable for local residents already. Hence why another reason we could have seen that price correction. But these are factors you may wish to trade off. Now, stock levels are dropping slightly over the past couple of months, but it's still up there. And days on market, even though this trend doesn't look very positive, the amount of stock that is good to buy and at the right price point and at the right yield is very low from what I can see. So these good opportunities will not last very long, in my opinion, once this market starts to heat up. Now, this is just one suburb, and I'm going to keep breaking down some more for you. And Claremont is also around that $550,000. You can look to get close to a 5% yield. And once again, like most of the suburbs in Hobart, it has gone through a huge price growth, a correction, and now the last month has seen positive price movement, and we would want to see likely more positive price movement before we consider this location. However, it could be that counter-cyclical opportunity you look for. Once again, rental growth has been shocking. It's just not there, which is disappointing to see, but it is a factor that we might have to trade off. The rented to owner occupier ratio is much better at 35%, and affordability is under 35 years. So very affordable in terms of a regional location. We can actually see the demand in this suburb is actually starting to increase, with the days on market dropping month on month, which is a very positive sign. And stock on market is looking pretty good as well. Nothing overly positive, but it is still acceptable for us to consider this location. And vacancy rates, once again, is very tight at around 1%. So Claremont should also be on your list of suburbs to consider if you are looking at Hobart. Where else can we look? Well, Chigwell's another option. Now, I'm going to talk about Chigwell and some of these locations as well a bit further on, so make sure you watch through to the end of the video. But Chigwell is another option you can consider where you can get above a 5% yield, where you can buy properties around $550,000. And once again, very similar to Glenorchy, it's gone through that huge price growth correction, and now we're seeing prices started to increase. Again, rental growth is not great. Rented to owner occupier ratio is around 37%, but the ERSAT score is at 1. I will get to that in a second. And affordability it's very affordable, around 30 years. So arguably one of the most affordable suburbs in Hobart, but there's a good reason for that, and I will get into that. Once again, stock levels are dropping, right? So there's early indication that less stock is coming on the market, which means it could start to lead to more and more price growth. I know this days on market trend isn't looking good at all, but when you start to talk to locals on the ground, the right properties at the right price, at the right yields are not that many, in my opinion. So of course, do your own due diligence, but Chigwell is another location you want to look at. Now, there are some other notable mentions that you can also consider, like West Mona. You can do further due diligence to this pocket here. Now, like I said, this is very early days to be looking at Hobart, hence why you have to be very specific about the suburbs you choose, because these will be the market leaders in the area. Now, of course, once a location heats up, all suburbs start to see a price increase. But if you want to be ahead of the curve, you really want to start looking into those 3 suburbs that I mentioned and start doing your due diligence from there. If you have any questions or confusions or not sure about where to invest or what to invest next, then you need to jump into the private community, because we've been talking about Hobart for the past couple of months and already been looking at these locations about where to invest into. And we have over 280 members to actually help you guys out. And I'm also here for private mentorship, deal discussion, deal vetting, and more. I can help you get your next investment property, right? So if you are looking for that tailored mentorship, tailored advice, all for an affordable price at $35 a month, it costs less than a family feast meal at KFC, then jump into the private community and we can help you out. Let's get back into the video. Now, there's one thing I've been saying that I would get onto these suburbs, is that suburbs like Chigwell, they are known to be more affordable, and we are seeing price movements starting to rise. But there is one thing that should be called out, is that when you start to look at the ERSAD score, or the socioeconomic parts of this area, places like Chigwell are low socioeconomic areas. Claremont, these pockets are not as desirable as other parts of Hobart, hence why these prices are a bit on the cheaper side. However, we have proven time and time again throughout Townsville, through low socioeconomic parts in Perth, for example, and even parts in regional Victoria now, that lower socioeconomic does not stop price growth from happening. Now, that doesn't mean we buy blindly. We still want to buy in good pockets, in good parts of a suburb. And we also want to be very specific about the type of tenant we put in that property, because it is known to be a lower socioeconomic area. So if that is your concern, then you should be talking to a property manager about these areas and making sure you are avoiding the bad pockets. Now, I don't want to just talk about the suburbs on a micro level. I've already told you the best suburbs. So if that's all you're here for, then you can click off the video, but you're going to regret it, because there is more to talk about Hobart and its future outlook. Now, Hobart is known to be a sleepy city, and when I visited there really wasn't too much going on, and I hope I haven't offended any Tasmanians out there. But the truth is, when you look at Hobart's economy, it is a well-diversified economy. It is very large, it is very strong. Hobart itself is outputting about 18 billion, giving about 60,000 jobs, and its GRP is increasing. And that's just Hobart itself. When we look at Glenorchy City Council, it is very similar, almost $10 billion in output with about 3.8 in GRP. It's also very strong. And when you look at Clarence, for example, it's also another $7 billion in output, and its GRP is also increasing. So Hobart as a city is getting better and better. The economy is growing, there is jobs being created, there is opportunities out there. And when you look at this industry, right, is well diversified across all parts. It's into healthcare, public administration, professional work, accommodation. We also look at Glenorchy, for example. It has very similar characteristics, a bit more on the manufacturing and construction side. And also when you look at Clarence City, for example, and you break it down by industry, a bit more on the construction, healthcare, and retail trade. However, these are very solid economies. It is well diversified. It is good for a long-term hold. And I know that may seem counterintuitive when I say that, because of the severe downtrend that it had faced during 2022 to 2023, 2024. However, I do think that is on the back of all the overperformance it has had during that 2016 to 2021 period. It performed so damn well, beyond anyone's expectations. However, it's had its reset and it's starting to look better in terms of the data, hence why I'm making this video about it now. And please don't get me wrong, I have said this at the start and I'm going to say it again. It is a very counter-cyclical approach. It is still extremely early days, and when you start to look at the 10-year averages of these suburbs and these locations, and as you can see here, it's still sitting above 8%. It's overperformed against the Australian average. However, there is opportunities there. I'm going to show you an example of an opportunity that I found in Hobart. However, that will come a bit later in the video, because I do want to go a little bit deeper into its economy. If you don't know, Tasmania actually has this complete interactive database of all the infrastructure projects that you can see. So you can actually go through and check out every single project that has been funded, that has an estimated budget, and where that project is actually going to be taking place. But the thing that I like to see more is the Tasmania's major project output and expenditure. It's very interesting when you have a look at this data. And when we look at this, we can actually see a couple of project regions. You got the south, the north, the northwest, and statewide. South is basically Hobart. North is basically Launceston. You've got Northwest, which is Devonport, Burnie, etc. And what's really interesting to see is that when you look at the funded major projects, you can see a large part of it, or $4.6 billion, is being spent on the south side. So the Hobart region, which is a lot of money. And then you've got statewide another 2.9 billion. So total about, 7, 8 odd billion dollars being spent in the Hobart region roughly and statewide. But what's really interesting to see is that when you do funding to be confirmed, is that a large part of it is actually being spent in the Northwest. 7.5 billion is possibly being spent up in Devonport area. And then you've also got another 5 billion being spent up into Launceston, possibly another 4 billion being possibly spent into Hobart region. So it's very interesting where the money is flowing and where big projects could possibly end up. And some of these big projects are ending up in the regional locations of Devonport and Launceston, which is quite interesting. Now, please understand this is funding to be confirmed, which means anything can change. And what's really good to see is that when you look at the funded, which is confirmed, you can see that a lot of money is still being spent in Hobart, which is good, right? But it's just an interesting point that I would like to make because it goes to show you where the money is potentially going, where the value is potentially, and it raises the question, is Hobart the best place to invest into Tasmania? And there's an argument to be made that no, but I will get onto that. And as I go onto that, what I wanted to show you was an opportunity of a potential house that you could look at when investing into Hobart. And so, what do you know? I found this beautiful house being sold for $560,000, so under 600K, on the 28th of May. So, whenever I release this video, it's not too far away. And when you look at this property, it is very well renovated or decently renovated. The kitchen looks a little bit old. It still seems to be in a very good condition style of property. The bathroom's a little bit old, fair enough. But overall, it is very good, not too shabby at all, right? And this one is sold for $560,000. And then when you start to look at the rental properties available in Glenorchy and you scroll down, look what I found, lo and behold. This property is being rented out for $580. At least that's what it's listed for. But $580. And look at the timing of this video, just 10 hours ago. If I recorded this video 10 hours before, I might have missed this, but I didn't. So 10 hours ago, so this property is listed for $580. And when you start to break this down, this one was $560,000. So if I change that to 560 and the property value, right, on a 20% deposit to purchase this property, it's going to cost you roughly $143,000. But I'll just double check the stamp duty because I think it looks to be a little high, but I can't remember exactly. Investment, 21,000. So a little bit less. So 21,000 I'm going to put here. So you're spending about 140K, but on a 12% deposit, you're spending about $100,000 to secure an asset like this. But what's really interesting is that this is being rented out for $580, which means you're achieving close to a 5.4% yield, which in my opinion, it's very good in today's day and age of Australia and the current real estate market. 5.4% yield is pretty damn good. And when you start to account for the expenses, your total expenses is roughly 45K. So your out of profit before any tax consideration is around $14,000 or negative $1,200 per month, which honestly is not too bad in Australia at the moment with current interest rate environments. But for those of you who are looking for high yielding opportunities, if you buy the right type of asset, something like this, if you are very picky and you're very patient and you find the right type of asset on the right street in the right pocket, this is something that you could achieve. And over a 30-year timeline, this is what the property could be roughly worth. And over a 10-year timeline, you could have done very well with something like this. So when you're looking at Hobart and you're being very counter-cyclical and you're being a smart investor and you're looking for an area with solid fundamentals, you're looking for that counter-cyclical opportunity, this is the type of asset I look for. Because let me tell you, once the market becomes hot, once there's a little bit of heat, these opportunities disappear with a click of the finger. You're not going to achieve 5% yields, and you're going to be competing with every other single BA and investor out there. And this is why I stress it is a very counter-cyclical opportunity. You may not get growth for the next 12 to 18 months. So there's always that risk, right? It's still very, very early days. So honestly speaking, if you had $600,000 right now and I wanted to spend that money and I wanted quick returns in the next 12 months, Hobart is not really the location that I would say right now, based on today's data and the current market environment, is the right place to invest. It doesn't make that much sense. However, from a value opportunity, from a perspective of I would just want to invest, set and forget, I just want to buy where the market isn't hot, where there's opportunities out there, there is a good case to be made. It's not just Hobart. I think Launceston has very similar opportunities. So if you are an investor who is looking for opportunities to purchase under $600,000 or around that mark, or under 550, then you need to be looking at Hobart, you need to be looking at Launceston, but these are cool market opportunities, right? This is where investors aren't there at the moment. This is a very counter-cyclical approach. You may not get growth in the next 12 months, but after that, these opportunities, they become more and more enticing. The less the suburb grows over a longer period of time, the more and more interesting that suburb becomes for an investor. So should you be looking at Australia's sleepy city? There is a case to be made, but only for the right type of investor. And like always, please do your own due diligence. And if you do need that bit of guidance to make sure you are on the right path, make sure you are looking at the right locations, and making sure that the suburb that you choose to invest in meets your criteria and meets your goals, that's when you have to be part of the private community. Because we and I will help you. Till next time, thank you very much.